Good evening, everybody. We're going to get started here in just a few seconds. Let me get things situated and we'll get right to it. Welcome, everybody. Welcome those in the YouTube channel. Make sure that you definitely understand that you guys look like about 10 seconds behind. So I'll keep an eye on the chat box for you guys there. Those in the Zoom room, I will also watch that that chat box as well. It's been a good day, good Monday. We had kind of a fun day at school today, doing science camp. Not quite as strenuous as our normal days, but definitely better than a normal school day. So ready to get started tonight, sharing some stuff with you guys. I'm going to pause this real quick and we're just going to quickly talk over. Yeah, we'll go over that as well. So just hang tight with me. Let me get my notes from today for you guys. And let's just talk about what's coming up. We're talking about nothing's really changed over the past 2, 3 months, really, to be honest. June is going to be opening up again with the market still trading on oil and the war risk, and definitely the central bank reaction to those trades. And it's going to be doing that almost to the opposite of what our normal textbook macroeconomic look has been. This is definitely still a different market. So again, we've seen a whole lot less involvement in advertisements with AI and things like that having great success because I think, and we're finding this to be true, like Sentinel is struggling in this market. So we've backed off of our entries on Sentinel. That does not mean that the system itself is bad. It just doesn't match this crazy, unpredictable market. Will it get back to normal? That's the question we've been asked. Absolutely. At some point, it's going to create, it's either going to get back to normal or it's going to create a new normal. And so here at Trade Masters, we're continually doing analytical looks at what the history is saying. And so we're building 2 to 3 months of history right now. Will we adjust Sentinel appropriately? Depends. We may create another tool that really handles chop a whole lot better than what we've had with TideFusion and Sentinel. Now, with that being said, TideFusion has done very, very well in keeping us out of trades that we definitely would have been in previously with other strategies that we used. However, still, it's been a struggle because TideFusion is a swing trading tool, which means you're going to be in that trade anywhere from 4 hours all the way up to 2 weeks. And you can see just looking at any market, whether you look at the charts or not, you're going to realize that the news is up and down, up and down, up and down. Well, the market's doing the same thing. So I'm being very, very cautious on those long-term targets that seem to have to take a week or two because I'm not so sure I'm going to get them. So be a little bit more cautious. And in a Hawkeye strategy in the morning, we've really tightened that up to kind of fit this market as well. And that's doing very well as well. So June is going to be typical of what we've experienced over the last few weeks, months. But over the weekend, the U.S. did say that it struck an Iranian radar and drone command site after a U.S. drone was actually shot down. Iran then, of course, said it retaliated against a U.S. base, and indirect talks have were disrupted, but they're still talking. I don't think until we get the nuclear dust that this is going to go away. So that was enough over the weekend to push oil just a little bit higher up to start the week. It lifted the dollar a little bit, while the euro and the yen and some of those most sensitive currencies to oil came into June today a little bit more defensive. So last week, and we talked about last week, we talked about this as well. The U.S. data had added a lot of pressure to that. The Fed's saying that their preferred inflation gauge, which is the PCE, rose again. So April was 3.8, May it was zero point 0.4 higher. I think it was earlier in the year, but core PCE still rose 0.2% for the month, 3.3 for the year over year. But at the same time, personal income is flat. So our disposable income has dipped and spending still rose on top of that. And the savings rates fell. And on top of that, the first quarter GDP for us was actually revised down. So the US is not falling apart, but the message is pretty clear. Inflation is still very, very a hot topic. Growth is slowing down. Uh, is our first thought, and consumers are carrying less cushion. They're not saving. And that kind of brought me into what I've been thinking about and praying about over the last, golly, I think it's been a month or so. Just feeling like I'm being led to do something a little bit different. Not that trading and investing is wrong. And I shared with the community this past weekend actually, of what I think God's laid on my heart personally. And obviously, if it's personal, I'm going to share it with you guys to, if it fits your dynamic, for you guys to also jump in as well. We'll talk about that. You're going to hear more about legacy or legacy compass in the future. I don't want to spend tonight about that because it's still too early, but I just have a burden for when we're trading, we're doing income. I mean, that's really what it is. We're not building wealth. We're building income in order to build wealth. Well, if we build our income and we have nowhere to put it in a wealth accumulation mindset, then we're just really kind of spinning our wheels. And that's what's been laid on my heart. And I just recently told, matter of fact, this morning, I think, I told Al the details of it. So we'll see how that comes along. And I'll just ask for your prayers on that. Back to Time Savvy. That's what brings us to this week's news. We've got the labor data, which is going to be a potential major swing factor. The May jobs report lands on this Friday, June 5th. And the last week's jobless claims were still only 215,000, which says pretty much that the layoffs are remaining relatively low. One of our news sources noted investors are still looking for roughly 85,000 jobs with unemployment right around 4.3%. So basically, in plain English, that just tells a strong payroll number would keep the higher for longer, maybe even higher still, Fed story alive with the interest rate. So a weak number would start shifting that conversation back towards slowing growth. Either way, Friday has a potential to really move the dollar, the yields, and the potential risk appetite for everybody. That's the U.S. look. Look to Europe. Europe is still looking very uncomfortable. The Eurozone manufacturing stayed in expansion in May, but growth slowed, 51.6. Input cost hit a 4-year high. So Germany, strangely enough, was even weaker at 50.1 and basically stalling. At the same time, our longer term Eurozone inflation expectations, they've actually stayed pretty anchored, which is kind of helpful when you're being a trader and investor. But policymakers still seem to be indicating that they're laying the groundwork for a potential June hike because the energy costs, again, that oil thing, are filtering into the broader prices of things. And that still leaves the euro in that awkward place. Rate expectations can help it a little, but the weak growth and the rising costs keep it from being a clean, bullish story. So we want to make sure that we're kind of understanding the macros of things when we're getting into a longer term trade. On the flip side, Canada and UK each have their own kind of version of that same tension. In Canada, the GDP headline looked ugly, enough to potentially flash what they call a technical recession. But the Bank of Canada is already telling markets not to overreact because the April estimate points to a rebound. So that makes the Canadian dollar still heavily dependent on oil, as we already knew, and on what the Bank of Canada does next, with markets broadly still leaning toward a hold at the June meeting. We'll see. And in the UK, similar thing, inflation expectations cooled again in May, which is a small relief to them, but the sterling is still vulnerable because the pound is an energy importer and oil remains much higher than it was before this conflict began. So that is a unique for those who are traveling over to Europe and the UK or Canada. You might see some impact on your dollar strength there. We do want to look at China briefly because China does kind of move the Aussie and the Kiwi a little bit and even has an impact on Japan. But China gave the market very mixed signals to start June. I mean, The way they ended May and going into today, it was not, you can't tell what they're doing. And of course, you also know a lot of their numbers are manipulated. So from the PMI standpoint, they came in at 51.8, which still means expansion is still there. And this was the sixth straight month above 50. So, but export orders fell for the first time in 5 months. Firms are still dealing with softer outside demand and supply chain friction, basically because of the Middle East conflict. So China is not collapsing, but it also is not giving the world a real good, big, clean growth impulse either. So for our traders, that means that Aussie Kiwi relationship could still bounce on relief headlines. So, but they do still remain very exposed to any wobble in that external demand, commodities, and general risk sentiment that's going on in China. So those two currencies, the Aussie and the Kiwi, kind of hit that realm. So just be aware of that. Looking at Japan, this is one of our safe havens. It's not acting like a safe haven at this point. My notes say that I took this morning. One of the trickiest currencies still is the Japanese yen. Mid-May, a poll in mid-May showed most economists are expecting the Bank of Japan to raise their rates to 1% in June. Now, the Bank of Japan officials have said Middle East developments will matter when they decide that particular timing. So we want to be keeping our eye on that. So on one hand, policy normalization should support the yen, but on that flip side, Japan is still very vulnerable to that higher imported energy cost and the intervention risk that never fully leaves that picture when the yen gets too weak. So that is why our yen pairs are still not acting like the clean old textbook safe haven trade as they have in the past. So we're being very, very careful with those as well. Now let's talk about a little bit about oil again and the impact we're having. So that brings us back to the steering wheel because that's what I call oil right now. A news source did report that OPEC is expected to lift its July output target, but it's modest. So at the June 7th meeting this week, that's when they're expected to do that. But actual production has already been hit very hard by that Gulf export disruption that's going on. So the U.S. also reported U.S. crude exports hit a record 5.6 million barrels per day in May, which kind of tells you the physical market is still tight enough that buyers are scrambling for barrels. So even if the headlines occasionally sound more hopeful, the actual energy system still is not back to normal. So that matters for every major currency that we are planning to trade, that oil is still that driving force. So if you're, and I would say this, I would be very, very honest. If you're not comfortable trading, this would be a good time to take your hands off and learn. Don't put real money on it. I'm still doing it because I feel comfortable with my system and my trade plan. So I'm still trading live. And the results are mixed, but overall, it's not the growth that I want, but it's better growth than sitting in a savings account. So for me, that's good in this kind of market. So just being real transparent. So my honest read for the time savvy trader of this week was again, the markets wanted to be at price peace. There is no peace, but it still has that trade inflation due to the oil. If the headlines will calm down and payrolls come in soft enough, then the dollar can ease and the risk currencies can breathe a little bit. However, here's always the but. If Middle East still flares up again or U.S. jobs stay firm, then we can anticipate the market is going to keep leaning toward that sticky inflation stuff, high yields, and the Fed that stays boxed in. And once we get past this week, we'll have a little bit better look at things. The next real cluster is staring at us in the face, and that's really that OPEC June 7th and some central bank stuff coming in the following week. And then the Bank of Japan comes in, and our Fed comes in mid-June. So, in other words, June looks like a month where our markets could finally give us some cleaner directional moves, but only after it stops changing its mind on every other headline. So, I'm kind of hoping that June, our summer months kind of settle into a groove, give us some consistency. Even a slow trend is better than a no trend, and that we stop reacting so much. So, if I were going to kind of give you guys a summary of what we're talking about here, I would say this is still a very disciplined market. You have to be disciplined, not a prediction market. We've been talking about that. Oil is still steering the whole thing. Central banks are still reacting, and Friday's job reports may tell us whether the dollar is going to keep acting like the safest uh, shirt in the dirty laundry or say, or whether the market finally starts to price some real slowdown. So we're going to let the headlines hit, let the candle settle in, and then let the clean move prove itself before we start chasing after it. We don't like to chase anything. So we're right at the 7:15 mark. Anybody have any questions in the room that we might want to address before we hit the charts? Oh, I don't see any in the YouTube channel. I got a thumbs up. Thank you very much. Hopefully this was helpful to you guys on that end. Yeah, yep, very good. Very good. Let's go ahead, close our slide show in front of us, and let's jump in to our trading. Again, we'd already talked about our calendar. We can look at these. We use Forex Factory. It's not the only one. And just before you guys get ready to go, I'm going to be very transparent, and this is not anything that you need to worry about yet. We've had several questions. Can you use any broker? Yes and no. We'll never tell you can't have your own personal broker, but I will tell you that TideFusion, Sentinel, and any other future development that we have will be in one of two options as far as brokers. We're currently using Novus. We're introducing another one that's ran by a dear friend of mine. And I will be transferring some of my money into that account because I know him well enough to know that if I have trouble, he can quickly resolve the issue. But we'll never tell you you have to be at a certain broker or not. But we will tell you that these tools will be available in those brokerage and they'll fit those brokerage accounts. We'll be doing them in an MT5 format. Um, and we'll talk about more about that later. So I would tell you to get yourself ready. Again, I don't mind paper trading at all, but if you've been with us any length of time, it's time to actually see what you know and what you really can do following a plan. We've already hit all of these in our conversations in my notes. We've kind of already hit these. And we mentioned June 7th. That's going to be the beginning of next, that's actually Sunday. But I want to make sure you guys are aware of this Friday chaos. And we can always look forward again if we want to. One, and you can see we've got some bank stuff happening here. And then boom, this week, the week of June 7th is going to be a doozy. It's going to be a fun one. So. All right, let's look at what we got. Looks like we've made a whole 85 cents over currently in our trades. Not horrible. We're still positive for the year since a reset there. Not horrible, not great. We got a trade alert just a little while ago on TideFusion. Let me see if I can bring that up for you guys. Let's see. Yeah, so we got a TideFusion alert here this afternoon. Actually, it was this morning. I just entered it this afternoon. I didn't even pay attention to this morning. This was at midnight. I got into both of those trades. They looked fine. This is the most skeptical for me. So I have a trade plan. When I reach a certain spot, I'm going to move my stop to break even and let it happen, whatever happens. The reason it looks tricky is because we've got this Sherlock zone sitting on top of here. And so we're going to have to dig through. And you can see this is a clear indication of institutional not wanting it to go up to this high. Okay. And I'm looking at the 2650 number. Our target's at actually it's 216, my bad, 216.50. My target's at 216.71. So when we get right about this area here, I'm going to go ahead and take my stop up to break even. If I just get a little profit out of it, great. This is not one I want. I want it to move first because we do have clean air. We got a little wick over wick here, but I think we're going to get through that. And you can see our fast buy signal is on this candle. And if you had bought, you would immediately have a downturn only brought back because that was news oriented. But your stop would still be where mine is at because we always put our stop on Time Savvy Trader using TideFusion below the pivot lows marked by our demand. Why did I get it? We broke a high, a pivot high, which if you look left is a key point. We broke it, definitely tested, closed above it, went a little further into this area and tested, came back to our major ceiling. And that's when I got in a major ceiling on this candle right here is where I got in, and it's bouncing from that. So what was once resistance is now could and seems to be providing that support that we need. I'm not looking to go, I would like to break this area a little bit more and then move my stop. Even if I get just a dollar, I want to break even, cover commissions, call it a free trade. And if it starts rising up, then great. That's how I'm going to trade the pound yen. Okay. Let's look at, yes, I am using Sherlock as a visual. I don't use Sherlock as a determination of whether I get in a trade or not. TideFusion has a lot of stuff in it already that does a lot of the analysis for me, but this is my confidence level. So let's look at the Euro US. We are also in this trade. You can see where our fast buy entry was, and we entered a couple candles later. Why? Because that was at midnight. I woke up this morning, immediately took a loss on it. I don't even know if I'm in this. No, I'm not in this. I thought I was. Maybe I chose not to get it in. Yeah, I probably, if I can't tell. I remember which one I looked at this morning. I think it had to be this one I chose not to. Nope, I got stopped out. My stop was below this pivot, took a loss today. So right on one candle based on news, I got stopped out. I thought I took this one. I was not sure. But boy, it does look like it wants to move up now, but it's too late for me to chase. I will not chase. Remember, fast buy are more aggressive. There are no regular buys for quite some time or regular sells. And the reason being, there's no real trend entry. This was sideways, fast. There's no trend yet. Now there's a trend, but there's no structure. Okay. Again, downtrend, we don't have the structure for a trend trade. And you can see you can avoid these if you like. That's completely up to you. It just means you're going to get less signals, and there's nothing wrong with that. All right, let's look at our CAD oil driven yen. CAD yen, you can see we're just sitting sideways with nothing. Nothing here to see. We move right on past. And that's why we call it the time savvy trader, because we had a good 15 minutes of getting a good understanding of what our macro picture is. And then we can really get the charts and really not spend a whole lot of time. It looks like our euro pound is going to cost us a little bit of money too. To me, this looks like it's going to continue downward. We got a fast buy. I took it. And you can tell my stop was down here. I don't like it. I think I'm going to just pull this up to this area right here, save a little bit of money. I'm allowed to move my stop up. I'm not worried about losing a trade. I just don't think this looks good anymore. We have this at the time that I got in, absolutely looks fantastic. You got everything pointing up with our ribbon, pointing up with our dotted line. We got a fast buy, we got in, and then we had a change. Now, if you notice, nothing's changed as far as color yet. I would assume when this closes, this ribbon will turn red. If it's not already, it just turned red. Yeah. So it turned red on this candle here. That's not my necessary signal to get out, but that's a definite red flag. When you have this drop, base drop, when we get done closing this candle, if it looks like this, you're going to have a Sherlock zone sitting right there on top of a demand zone, which we just created a Sherlock zone there. So again, we're not worried. Remember, we're not looking to be 100% correct. We're profitable around 50 to 52% on TideFusion. When I say profitable, reasonable profit, not just 1% annualized. So we're not looking at getting all of them correct. Mathematics, if you follow the plan, it's really very simple. You don't have to be perfect. I'm going to take that off. Let's go Kiwi. Not a whole lot happening here. You can see it's just real sideways, real ugly. This would have lost you money. This one would have lost you money. This one has a trend buy. Depending on how far you went, you might have made it on this move right here, possibly this move right here. But look what we got here. We're going right into the supply. Again, we're coming into demand. So if you happen to take this candle here, this is the true buy candle, and you were to go here, that's 167 pip move if you're maxed out. My bet is we would not have had that much. Yeah, we'd be about 130, so maybe that would be not a bad trade. Not a bad trade. But we didn't take it, so if and buts, candy nuts, you know. Let's go to our Sherlock here. And let's go into our US yen. This is the one that's just really, really strange. It looks like we just got a buy signal or potential buy signal coming. Man, I don't trust this because so much is relying on the US dollar holding. Notice this pointing up flat, turn color flat, green flat. Yes, we've got it, but look what's happening with our wicks. Look what's happening to this left side here. That is a wick over wick on a lower time frame. That is an institutional type movement. So when we go in here and we squish and squat, I don't care what you say, whether there's a Sherlock zone here or not, something happened right here that caused that movement to go. And not only did it cause it to go all the way down here, it came back up and went back down here again. Came back up and went back down here again. Came back, went back down here. They're forcing all the buyers out at this point, exhausting. Once the buyers take, or all sellers, I'm sorry, sellers out, buyers are taking over. When there's fear, the wealthy buy. When there's greed, the wealthy sell. Okay? So we would have been out on this buy. We would not, well, hold on. If this was the pivot low at the time that the buy signal, you would have made your target. And that may be why that arrow's there. We may have played that one already. Right now, man, I just don't feel comfortable personally trying to go from a weekly ceiling and monthly ceiling to just about right here, which is only 75 pips. I don't want to risk 82 to get 75. I'd risk 82 to get 120-ish, which takes us up into this realm, the 161 mark, which is right there, past that zone. I'm not willing to take that shot. Not with the news that's coming out. Okay? Yeah. You could short it if you wanted. There's nothing saying you couldn't. But if you look, let's look at it again. That's a great question. If you look at that, you're going to counter trend because truly this is more of a trend over the last week or so, an uptrend. But notice it was sharper up, flattening out, and just kind of wobbling. This was the more of a decisive move. When we got this one, that one would have been a better one to go. Notice how your ribbon is pointed up. Notice how your dotted line is pointed up. You could use Hercules even as a score guide if you wanted to do so. But that's your better signal right there. Yes, exactly. I don't trade a whole lot counter trend, by the way. Here's one, strangely enough, that we're actually earning a little bit of funds on. I think this is a very, very doable trade. There's nothing crazy about it. We will have to make some new highs. We'll have to break the ceiling, but nothing crazy. And when we look at Sherlock, there's nothing. There's no headwind. We've got, we had the buy signal here. We had a new demand zone, institutional demand zone form, and another institutional demand zone form. Now notice it broke down this one. This one's going to go away after the 4 hour count, probably here in another, what time is it right now? In 30 minutes, this one will be gone. This one will turn gray, but it held, the pivot low held. And so our stop is down here. I think this is a very, very doable trade overall. Would I get in it now? No, no, I wouldn't get in it now. This is one that we got a signal on this candle. We got in one, two, three candles late. So I got in right about here where that blue line is on this candle and it moved up nicely, fell back down, which we always know that it's going to do that. That's pretty typical. And it bounced right back up. The nice thing about it is notice it bounced off of our dotted line. That's also a nice factor. Yep. Crazy pairs. I'm just saying there's not a whole lot. There's a lot of guessing going on, and I try to avoid guessing, except in demo account. Demo, I like to get the data from it. Yeah, the Aussie yen I'm in live. The pound yen I'm in live. The Euro US that got stopped out, I was in live. So yeah, we'll see. We'll see how the numbers wear out. Again, this is demo, and anything we do tonight, again, we always say is for educational purposes. We're not showing you or giving you any sort of recommendation on what you should do. We're just showing what we're doing, and if you want to do that, you can do the same. Okay. All right. To me, this looks, again, this demand zone is going to be gone. It's going to refresh itself. It's going to be gone. That has been chewed up back here. It really turned, should have turned pink, created a high right there. Pivot high, pivot low. We have a red ribbon here, red dots here, but the structure did not give us a sell signal. I would not sell this at this point. because the US dollar's involved, you've got two solid demands. We could go to the daily and see what we got. And there you go. You're sitting inside a demand zone. I wouldn't be selling it quite yet. It's always good to go look and see what the daily Tide Fusion is doing, just to see if it gets a little bit different picture. But remember, Tide Fusion as programmed is for the 4 hour chart. So anytime you jump off of a 4 hour chart, you're kind of taking your own risk in your own hands with Tide Fusion. It is designed for the 4 hour. Now, Al has kind of used some other strategies with it, but it's not geared that way. So just be prepared for that. So that means we stay out of the Aussie US. Let's see what other pair we can look at, though. We'll go over and blow this up. We got the Aussie US. We need to look at the pound US. Nothing. Absolutely ugly. That was easy. Looking at the US CAD. Now, this one, we're going to be finalizing our signals. You would not be getting a signal on this. We have not sent these to the alerts because we've been doing data on this. Nice trend buy, nice pullback and an uptrend. It's our only one that we've had in here, but we're going right in. So be very careful with that one. Not saying that won't work, okay? But I'm very, very leery of this one. But you see how leeriness doesn't pay sometimes. That's why I'm leery, because it just as much as it comes down, it goes up. And if we look on the 3 days to get a better picture of what it looks like overall, you can see the overall push is downward but sideways, and we're above the downward push. It's just crazy. Okay, just above. So let's pull that out. That's the US CAD for those who love to trade that one. US Swiss, I've been staying away from. Remember, if you go short on the US Swiss, it does cost you swap fees, and there's just nothing here for us. Remember, not even 4 months ago, this was the one we hung our hat on. We rode that thing and rode that thing, and you can squish and squash. We were riding it all lit. Nice trend. We had these coming in, and it was perfect because, yeah, we had a pullback, but our stop was up here, dropped way on down. Some good, good trend trading. But those days seem to be gone for now. And we looked at the Aussie US, and we got our last one tonight is the Euro Yen. Again, this isn't one of our alerts. We are doing data testing on it. I want to provide you guys with enough choices without giving you too much choices because you got correlation issues. We want the most highly reliable ones that we can possibly get. And so now that we've had about 7 months of data, you're going to start seeing some things change in the next couple of weeks with our how we trade this, and that's what we want to always be doing, using our software that we've created to analyze the data quickly and give us adjustments that we need to make. So, all right, I'm going to move this back to the pound US because I like that one the best. It's one of my favorite pairs. Set it up, and I don't see any questions in the chat box at all. I hope you guys got value out of this. That 15 minutes at the front, I think, is even more key now than even the trading part. The trading part is easy if you fully understand what's happening in the real world of things. And again, I'd ask for your prayers for guidance. And as well, Al's going to be traveling over to Europe. He's thinking about doing a Hawkeye session during the Frankfurt time zone, which will be about 2 o'clock Central Time, I believe. For me, I will be out of school, so I may do that with him and then continue the regular Hawkeye in the morning. So it may be for a long trading day, but I just live for the summer break and getting into the community with you guys and being able to trade. So, but again, don't get caught up being caught watching the screens all the time. You don't trade to be watching screens all the time. Get your trade, one or two, three good trades in a day. Have a maximum loss that you're going to be willing to take, and then walk away and quit tinkering. Okay? Have a great week, guys, and we will catch you guys next Monday night. Don't forget tomorrow morning. And this week, Hawkeye is still being run. Al will be traveling, but we've got a stand-in for you guys that will help out, and she does fantastic. So God bless, and we'll see you guys real soon.